Hello traders, Gary Wagner here. It is approximately 12 noon in Honolulu, Hawaii. It is Monday, the 5th day of November, and this is the daily report for gold and silver. We have both markets, gold and silver, currently under pressure, down about $22 in gold. As you can see, current print around 1722, 1723. That is basis the cash market. And silver in the cash market, 3207. That puts it down in terms of percentage, about 1.8% in silver and about 1.27% in gold. Let's get started and right to the gold chart to start out. Traders, we are currently looking at a daily chart of spot or cash gold. And I have added two basic Fibonacci retracement sequence series. The first series starts from the end of wave 5, which is 1910, the first of our two tops. The second was around 1920, and takes us to this low at 1534. The second of these two retracements starts at the beginning of this last wave 3 and takes us up to the first top that it hit before retracing. Interestingly enough, you know that I always look for something I call Fibonacci harmonics. It's where two different time sequences will reveal very similar information. 1722 is a 50% retracement of the larger of the two retracement areas. But when we look at the shorter of these two, interestingly enough, we almost get an exact match, because you get 1725 right in here, and they both match roughly where the market is. Why do I bring that up? I believe that that particular support should have an opportunity to hold, and as you can see, it does have a good Fibonacci harmonics in there. At the same time, we did get strong fundamental news out that would weaken gold today, and that is that there is a treaty rewrite that is currently being sought or desired by both the French president as well as the German chancellor. And really what they're trying to do is demonstrate the fact that they want to put a handle on the debt crisis and want to have some sort of guidelines or something which gives the global investing community at large some confidence about the work that they're doing. It's a great first step, but it is still just a step. It is not a solution. It's just a request that we talk more and that we come up with these things. So I'm not convinced that this crisis is going to get resolved very quickly or quicker due to what we're hearing now, but it is absolutely a step in the right direction. When we take a look at the way the market did trade down, the one bearish note, real bearish note that I see in terms of a pattern, is this Three River Evening Star. And you can see you've got these double dojis that really capped the market on Friday and Thursday. Then you've got this down day that's fairly drastic, doesn't really give back all of the gains we saw when we had that $40 up day, but it gives back a good percentage, and it also gives back 38% of the recent gain, and the recent gain that you saw is from about 1600 up to about 1801. So you've got this $200 rally. The market comes down. When it comes back up and then comes back down, as you can see, 38% here also matches to a 50% retracement of this larger move. And the larger move, of course, is this entire rally that began back in July, terminated really at the end of August, and then really terminated at call it the first week of September. So in terms of a move, if I see that the market finds good support in this area, we will look to dollar cost average and add to our position here. There's no doubt about it. We're at a good point technically. I simply want to see how it reacts over the evening session as we go into the overseas market. Traders, in other news, when we take a look at our Standard & Poor's and we also take a look at the dollar index, you see the dollar index is drastically higher this morning. You can see after this week of decline, we are back up towards 78.66. We are also staging a rally right now in the Standard & Poor's. With the Standard & Poor's strong, you would think that that would be a bullish influence on silver, and silver has declined actually more than gold has. And here's what I'm looking at with silver. Currently, when we look at where it sits, we have to be very cognizant of the following fact. And the fact is that it is currently trading above 31.90. 31.90 is a pretty critical point to me. 31.51 is also pretty critical to me. Once we're able to find support, or I should say if we're able to find support in this area, our next target, of course, is to break above 32.90. And 32.90 has been where silver has had an issue in that, as you can see, it's been able to effectively trade above it but not close above it. And that, of course, is significant because it tells me we don't really have the follow-through buying that we really need to see to push this market higher. The big story, of course, is the dollar. Again, we have this tremendous dollar strength. We're getting a flight or a move into the dollar-based investments, and that is absolutely a bearish influence on the precious metals markets. There can be no doubt. But the fact that we've had a sell-off, and the sell-off is not given back as much as we saw when it gained, and the logical point that it seems to have traded to, meaning the fact that we've got our support, this low right down in here is matching this 31.90. Current print is well above the real targets that we have, 31.55, 31.90. And really, if it can find support, we need to see if it's going to have enough momentum to move back to this current resistance area, and more importantly, be able to move above. Because if it does move above, the real next target is $35 per ounce. And my sentiment is that we should have some sort of rally as we go into this last month of the year. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Tuesday for another daily update and review. Bye-bye.